external benchmark, etc. Ref. 1A1. Varies and depends on nature of biz. Recovery. Loan recovery powers under SAFISI Act. More in pillar hashtag 1B2. Housing finance companies have SAFISI powers. But all types of NBFCs don't have it. More in pillar hashtag 1B2. Consumer complaints RBI's ombudsman, bank's internal ombudsman ***. RBI's separate ombudsman for NBFCs starting the NBFCD since 2018 ***. More about these ombudsmen in pillar hashtag 1D. Insurance handout black question mark ornament find correct statements about NBFCs in India asked in UPSC prelims 2010. A. They cannot engage in the acquisition of securities issued by government. B. They cannot accept demand deposits like savings account. C. Both A and B. D. Neither A nor B black question mark ornament. The main functioning of the banking system is to asked in UPSC CDS 2013-2. A. Accept deposits and provide credit. B. Accept deposits and subsidies. C. Provide credit and subsidies. D. Accept deposits, give credit and subsidies. 13.21.7 NBFCs regulated by RBI. Table 10. Raised hand. No need to remember examples. Just observe pattern. Investment and credit company. They mainly help buying assets and machinery like tractor, bulldozer, etc. e.g. SREI equipment finance, limited consumer durable loan finance. A BNPL help buying TV, fridge, mobile, AC etc. with buy now pay later. BNPL equated monthly installment, EMI model. How they are similar or different equals PhD not required. For example, Batch, PCB7, Core Investment Company, CIC, they do long-term investment in companies. E.g. Tata Capital, Reliance Capital, Infrastructure Leasing and Financial Services Limited, Illinois and FS. Illinois and FS in controversy because couldn't repay interest to lenders. More in next NPA handout. Infrastructure Finance Company, IFC, Infrastructure Debt Fund, IDF. Internal difference not IMP for UPSC. Basically, they give loan for infra. Projects like highway, airport, power plants. E.g. Rural Electrification Company Limited, REC. L&T IDF, Kotak IDF, IDFC IDF, IDFC First, has separate license for private sector bank. Asset Reconstruction Companies, ARC, they buy bad loans of NPA from banks and other NBFCs, and try to salvage value from the underlying assets. E.G. Anil Ambon is Reliance ARC. Factoring companies, they lend short-term money to client against his invoices or accounts receivable. E.g. IFCI Factors, Siemens Factoring. What is factoring? ANS, pillar hashtag 1C, gold loan companies e.g. Muthoot Gold Loan, Manappuram Gold. RBI decides their loan-to-value ratio, LTV, more in pillar hashtag 1A2. Microfinance Institutions, MFI. 2010, RBI's Y.H. Mailgam Committee. RBI created a new NBFC category called Microfinance Institution, MFI. They give small loans to poor without collateral, flexible EMI. E.g., Bandhan, W.Bengal, separately got PVB license, Disha, ABAD, separately got SFB license, SKS, Andhra, Kashpur, UP, Bijjeevan, Karnataka. S20 appreciated the role of MFI in helping the weaker section because majority of its borrowers are women, 97%, SC to ST, 30%, and minorities, at 29%. Who regulates them? RBI plus Ministry of Corporate Affairs. Who can borrow from MFI? ANS, household whose annual income is not more than 1.25 Indian rupees lakh, rural, or 2 Indian rupees lakhs, urban. How much can one person borrow from an MFI? ANS, not more than 1.25 Indian rupees lakh. ***, before 2019 October above limits were lowers. Mudra, 2015, a non-deposit taking NBFC owned by SIDBI. It gives indirect loans to micro enterprises through PM Mudra Yojana. More in Pillar 1D Financial Inclusion. Batch, PC. Fintech costs, P2P lenders. It is like OLX Quicker, connecting sellers of second-hand goods with buyers. The P2P lending websites connect borrowers and lenders. E.g. Faircent.com, Cashkuma.com, Credmint, etc. 2021 Credmint launched. Newspapers gone crazy, so Barbashonas are demanding that I should teach them PhD thesis on its business model. Raised hand by, I'll not teach it. Look at previous exam MCQs in this handout. Fintech costs. Account aggregators, AA, they manage information of a customer's financial assets and display it to him or to third party, like loan giver, credit rating company and apps. 2018, RBI gave license to 5 costs NESL, cookie jar, etc. Fintech costs, loan aggregators. E.g. loanada.com, moneytap.com, loanbazaar, Paisabazaar, etc. Portals. Challenges. Often these digital platforms that act as outsourced agents of banks for NBFCs to sell loans. But customers face difficulty in complaint or grievance redressal. Now even Google Pay app developing features for loans. So RBI has expressed its displeasure and is presently working on rules to fix this. Residuary, any NBFC not regulated by any other regulator falls under RBI's purview. 13.21.8 Credit Information Companies, CIC, versus Credit Rating Agencies, CIA, Credit Information Companies, CIC, Credit Rating Agencies, CIA. Regulator RBI SEBI e.g. Civil TransUnion, CRIF Highmark, Equifax and Experian. Standards & Poor's, Moody's, CRISIL, CARE, ICIA, Fitch Ratings India Private Limited, Brickwork Ratings India, SMERA. Check the creditworthiness or loan repayment capacity of individual persons, companies, NBFCs, governments, local bodies, non-profit organizations. They do not check it for individual persons. Rating numerical scores, e.g. CIBIL score between 300 to 900. Alphabetical symbols e.g. AAA, AA-D, etc. Utility. Better the score similar to the left cell. Batch. 1. Your loan application will be passed more easily by the bank, a loan-giving NBFC. 2. You'll have to pay lower interest rate. Black question mark ornament MCQ. Find correct about credit rating agencies, CIA, in India. Prelims 2022, 1. They are regulated by the Reserve Bank of India. 2. The rating agency popularly known as ICIA is a public limited company. 3. Brickwork Ratings is an Indian credit rating agency. Which of the statements given above are correct? A. 1 and 2 only, B. 2 and 3 only, C. 1 and 3 only, D. 1, 2 and 3. 13.21.9 NBFCs regulated by SEBI, more in pillar #1C. Stockbroker. They help clients buy sell shares and bonds, equals debentures, depending on his instructions e.g. Motilal Oswal, India Bulls, Shere Khan, Kavi etc. 2019, Kavi Stockbroking transferred clients' money and shares into its own group company Kavi Realty without clients' consent, so SEBI banned Kavi. Mutual funds, MF. They pool clients' money and MF manager invests it in shares, bonds using his own discretion and expertise. E.g. SBI's Sharia Equity Mutual Fund, clients' money invested in Sharia compliant costs that don't deal with alcohol, pork, debt, tobacco or weapons. Rights INVIT's pool and invest money in real estate, infra projects e.g. IRB. More in pillar #1C, SEBI handout. Investment banks, USA term, and merchant banking companies, UK term. Underwriting, merger and acquisition. Wealth management of rich people, e.g. Kotak Mahindra, Citigroup, Bank of America, DSB Merrill Lynch, Morgan Stanley, SBI Capital 2021. SEBI allowed payments banks to act as investment bankers after fulfilling the rules or regulations of SEBI. Venture Capital Fund VCF helps startup companies to arrange capital e.g. IFCI VCF, IDG VCF. Batch, PC 13.21.10 NBFCs regulated by others. Regulator example NBFC companies. IRDAI, more in Pill 1D. Insurance Regulatory and Development Authority, IRDAI, regulates 1. Life insurance companies e.g. LIC, HDFC Standard Life Insurance. 2. Non-life, equals general, insurance e.g. IFFCO Tokyo General Insurance. 3. Policy aggregator web platforms such PolicyBazaar.com PFRDA, more in Pill 1D, Pension Fund Regulatory and Development Authority, PFRDA, regulates all pension funds, except EPFO, and other statutory funds. National Housing Bank, NHB. Housing finance companies such as DHFL, Mudhoot Housing Finance, etc. These companies were earlier regulated by NHB, but after Budget 2019, this category is regulated by RBI. Ministry of Corporate Affairs. 1. Nitty companies, mutual benefit club, only members can borrow. E.g. South Madras Benefit Fund Limited, Mabon Nitty Limited, of Manappuram Group. 2. Microfinance companies, learned in previous section. Microfinance companies, some of the regulation work done by RBI and some of the regulation work done by Corporate Affairs Ministry. State Registrar of Chit Funds. It regulates chit funds. E.g. Shriram Chit Fund is a type of collective investment scheme with monthly contributions and borrowing by contributing members' chits. Ref pillar #1D. 13.21.11 NBFC, shadow banking. S20 observed, shadow banking is a set of activities and institutions. They operate partially or fully outside the traditional commercial banking sector. They are not fully regulated by the RBI. A shadow banking system can be composed of a single institution or multiple entities forming a chain. They mobilize funds by borrowing from banks, issuing commercial papers, CP, and bonds, equals non-convertible debentures, Table 11. 3 important segments of the shadow banking system in India: HFCs, housing finance companies, e.g. Dewan Housing Finance Limited, DHFL, LDMFs, liquid debt mutual funds invest clients' money into short-term debt instruments such as T-bill of Gov and commercial papers or of companies. E.g. certain schemes by UTI, Kotak, L&T, Tata Mutual Funds, retail NBFCs, retail non-banking financial companies such as gold loan companies, asset finance companies, etc. Interest, riba, is prohibited, haram, in Islam. So, Islamic banking operates through ijara, mubaha, musharaka mechanisms in which depositors' money is invested in borrower's property or business, and returns are shared in form of rent or profit, but not in the form of interest. While previous committees said give permission to Islamic banks in India, but RBI is opposed, 2017. 2017, Kerala Gov allowed opening of Islamic Bank by registering it as cooperative society, so as to avoid the RBI's ban. But further, legal controversy not imp. Raised hand. Pro-arguments. Financial inclusion of minorities and Muslims. Anti-arguments against allowing Islamic banking in India. Specialized manpower required. Secular India's PM Jan Dan Yojana and post office payment bank efforts are sufficient. USA Gov alleges their involvement in terror finance and money laundering. 13.21.13 Informal financial intermediaries. Unlike banks for NBFCs, they provide loans without formal application procedure, etc., but require property of vehicle, home, goods, crop or gold, etc., as collaterals or pawn. They charge very high compound interest rates and use muscle power for recovery. For every 100 rupees borrowed by a rural household, 33% from informal money lenders, remaining from banks, friends, family, etc., 2012 data. They don't fall under RBI purview, but state govs have individual laws to regulate them, e.g. Bombay Moneylenders Act 1947, Kerala, 1958, Gujarat, 2011. These laws require such informal lenders to register, impose ceiling on the interest rate, and prohibit strong-arm tactics. Batch, PC. Table 12, following examples of differentiation, not IMP for IAS exam, but banking exams. Types: indigenous banker, moneylender or brokers. Medieval time known as Shroff, Shikapuri, Chettiar, Marwari, Arya, Rastogi, Kabula, Patan, Quistwala, Ahesha, Village Banya, Soni, Mahajan and Seth, pawnbrokers, financial brokers. Money mobilization. They used to mobilize money from public via 1. Hundi, bill of exchange, 2. Commercial bills. Table 12, following examples of differentiation, not IMP for IAS exam, but 13.21.14 Writing hand mock questions for mains 1. Discuss the evolution, structure, a function, objective of payment bank, RRB, etc. equals. This is a too simplistic mains question for UPSC. These institutions have to be seen in the context of GDP, economic growth, investment, NPA, bad loans, inclusive growth, or financial inclusion. So, indirectly you may use them as fodder points in such questions. 2. Suggest reforms for public sector bank, discussion their success after nationalization, etc. equals. Those topics are still half finished until we study pillar #1b2, bad loans, Basel and other burning issues in the banking sector. Pillar #1b2.